TheoTRADE. This is Don Kaufman. It's September 25th, 2024. Just about 30 minutes to go to the cash close here on this Wednesday afternoon. And to tell you, you're looking at the marketplace right now, you're like, it's quiet. It's really quiet, especially you start looking at like S&P futures and the volume. Seriously, 822,000 contracts. You got to wake up. This marketplace is going to wake up. But look, there's some things you want to focus on right now. I mean, first of all, you've got defensive posturing going on, which, well, I'm going to show you here momentarily. You're seeing this also dump financials. Utilities are being bought like it's just going out of style. And then like tech is just holding this whole mess together right now. Look, there's going to be some volatility also in the latter portion of this week. Let's get to work here in this evening's video. I guess we could start with the S&Ps. Again, the S&Ps have been relatively quiet. If you take a look at the SPX, all right, if you see this line on your screen that I'm highlighting right now, that's where the week started, which is basically like, just north of 5,700. Come on, we're trading 5,720 right now. So for the most part, look, it is what it is. It's massively unchanged. You bring up the QQQ and the QQQ, all right, where are we this week? The same thing, like massively unchanged. But as I was saying, there's kind of, again, there's rotations going on. And what I can only assume is to be defensive posturing. Defensive posturing by likes of like, look at Walmart. I mean, again, it's trading like some tech stock. It's up 53% on a year-to-date basis. But even more than that, well, defensive posturing, how do you possibly know? Look at this thing cracking outside of expected moves. People, this is like violence inside of trade. And we're talking about it's freaking Walmart. Look at this. Breaking the expected move, cracking an expected move. Okay. Huge, like almost, 2.5 sigma move over here. All right. We had a down week and then back outside again. And the marketplace is just, it's like, it's not expecting the kind of move that you're seeing in Walmart. So I call that defensive posturing, but look, that's only one stock. You start looking at, though, at utilities, okay? I can't help but stress again, utilities, this leaves me nervous. First of all, an incredible and linear move. When I'm talking about defensive posturing, I'm talking about, capital is being moved here for a reason, okay? And I believe that reason to be like it's defensive posturing, meaning like, hey, where are you going to duck and hide? Clearly, we're not buying bonds right now. We're a little nervous about that. The irony of bonds is interest rates is actually going up. So instead, what are we doing? We're buying utilities, okay? It might be a little bit of calm before the storm to this marketplace, and I hate that cliche. But when you look at the utilities, like this screams crap could hit the fan, and it would make perfect sense when you see like, we're tossing caution to the wind and just buying Walmart and buying utilities. You give me a reason for that one, okay? Oh, I must buy utilities because what? Because they pay a crappy dividend? Is that where you're going with this? Because you're not going to convince me at 2.7% because the 10-year, all right, is still smoking that, right? This just doesn't make much sense, okay? Speaking of the 10-year, and we're going to talk about interest rates for just a second because you got to bring this up because after the Fed, everybody's like, they cut rates, man. Interest rates are going nothing but up. That's it. Interest rates are going up. And you should be, aware of just that. And for, these rates may be overshot a little bit. So the bonds are selling off. Interest rates are actually coming up. But the defensive posturing, again, kind of makes me a little bit nervous. The other thing is with interest rates coming up, it really kind of draws into question what the latter portion of this week is going to look like. So since the Fed cut the 50 basis points, the truth be told, some mild economic data has come out. We had a very poor consumer confidence number that rocked markets, albeit briefly. But now we're actually going to start to get more interesting because now you can start to see stuff like durable goods. This crap matters, right? And you're going to hear from like, Fed speak, which is coming back, and Jerome Powell, and obviously jobless claims, which is going to matter. But then on Friday, this one's going to get wild because I can make an argument for PCE data is coming in. PCE data, if it comes in hot, which means inflation is back, everybody's going to be like, oh my gosh, the Fed cut and inflation's coming back and the Fed's going to have to backtrack. That's going to be bad for the marketplace. But I can also make a spectacular argument that if inflation is getting crushed, meaning if PCE comes in very, very, weak, that inflation's getting crushed, You're gonna be like, oh no, the Fed knew something, and that's why they cut 50 basis points. It's like, look, if PCE doesn't come on spot on, things are gonna get volatile. They're gonna get volatile in a hurry. Throw a little GDP in there, okay? It's the makings of some fairly wicked trade. And as I said, markets are quiet right now, but don't be getting off your game. There's still a 75-point move, okay, priced in this week, and at 75 points to the upside, 75 points to the downside. And right now we've done absolutely nothing. I think you have to anticipate we're gonna go for it a little bit here. So as I was saying, okay, along the lines of defensive posturing, right? I was also talking about dumping the financials. Now, the financials are getting interesting too. They're actually hitting their lower edge of the expected move today. It's kind of unexpected. With that, look at this. We've actually got energy, of all things, like energy. Geopolitical risks haven't been greater, okay, in an extraordinarily long time. Like in most of our lifetimes, like geopolitical risk hasn't been necessarily as great. And it's like the marketplace right now, it's not giving any credence to it whatsoever. And again, you've got energy actually cracking to lows over here. And as I said, so you got financials coming off. Everybody's dumping some of the financials. They're dumping a little bit here, of course, in the energy sector. We're seeing everybody rush in and buy, defensive posturing, as I said, in utilities, buying Walmart over here. And then you have just tech. And look, tech's not doing anything astounding, right? It's not doing anything astounding, but it's kind of holding this whole crappy mess together right now. All of a sudden, some sunglasses come out from Meta. Everybody's like, I got to have those. $400 Ray-Bans with a camera to tell me what I already know. Anyway, it's getting a little crazy out there. And I'm going to tell you right now, look, the latter portion of this week, okay, things could get extreme. So again, kind of buckle up. As I was saying, the SPX, and I said this a couple times throughout the course of the last few trading sessions, just look to the remainder of the week. Still $44 of movement. I'm going to tell you right now, I would take the over on that one, meaning that the markets are pricing $44 of movement. I'm pricing a little bit more. There's also the possibility, okay, of some wild movement inside of the dollars. A rally back today. You know what's even more interesting? That gold continues to rally in the face of a rally of the dollar. Okay, so here's another one. Again, conflicting signals on the screen. Defensive posturing everywhere over here, and still a decent size expectation of movement, right? So yeah, look, the remainder of this week, got everything in place for some wild action. Stay tuned on that front. Of course, I'll be live both Thursday and Friday here at TheoTRADE. Have a wonderful evening. Bye-bye.